Live from the Business RadioX studio inside Renaissance Bank, the bank that specializes in understanding you. It's time for North Fulton Business Radio.
And hello again, everyone. Welcome to another edition of North Fulton Business Radio. I'm John Ray, and as usual, folks, we are broadcasting from inside Renaissance Bank in beautiful Alpharetta. And if you are tired of the big bank experience, you know what I mean by that. If you know what pictures came to your mind or frustrations came to your mind when I said that, if you're looking for bankers that'll answer their own phone at a bank, though, that's big enough to handle pretty much any need you can throw at them, because that's kind of bit important too, right? Renaissance Bank, I think, has that magic formula, and I know that from my own experience with them and that of both me and my clients. And here's the bonus. You're not going to have to worry about picking up the paper on Monday morning and reading about Renaissance Bank. So, and if you've been following the financial news, you know what I mean. They've got a rock-solid balance sheet. So, go to renaissancebank.com, find one of their local offices, and give them a call. I think you'll be glad you did. Renaissance Bank, understanding you, member FDIC. And now I want to welcome Mark Campbell. Mark is a registered agent with Linqqs ERC Specialists. Mark, welcome.
Good morning. Thanks for having me.
Thanks for coming in. So you've got a voice for podcasting and radio.
Imagine that.
Yeah. How did you get that?
God-given.
Okay. Well, I need to go to class with you, buddy. You sounded great over there, but let's move on and talk about what you're doing at Linqqs ERC Specialists. How are you serving folks out there?
Well, the way we serve folks is all of my clients are businesses, nonprofits, or churches that have 500 W-2 employees or less. And what I do is work with them to get them through the qualification and submission process for the employee retention credit. We can talk about that in a minute, but that's my role, and I like to think of it as helping them get found money.
Okay. Well, let's talk about what ERC is. Let's just get right to it.
Sure, absolutely. So the CARES Act was enacted in March of 2020. And this is the same legislation that brought us the PPP loans and the EIDL loans. Yeah. And it also brought us the employee retention credit, which is not a loan. It's actually a tax credit. Read into that, refund.
Right.
Initially, it was very difficult to qualify. For example, if you'd taken a PPP loan, you couldn't qualify for ERC.
Right.
That has all changed, and a lot of things have changed. And it's become significantly easier to qualify, but the process is no less complex. If that makes sense, right?
No, that makes perfect sense. So, and what you're talking about is a tax credit. So it's a credit against taxes that you have already paid.
Correct. It is all based on payroll tax.
Okay. So credit on payroll taxes.
Correct.
Both state and federal?
Federal only.
Federal only.
Yeah.
Okay.
And it is not a dollar for dollar kind of situation, the way the calculations work, but in essence, it is a refund based on the payroll taxes that you've already paid.
Got it. So you say this is found money. What do you mean by that?
What I mean by that is that after submitting and qualifying, the business is actually going to receive a refund, just like a customer or anyone, any taxpayer receives a check from the Treasury for their IRS annual refund. Business owners, nonprofits, and churches are going to actually receive checks from the Treasury based on the calculations that are done to get to their refund amount. There were 6 quarters that were qualifying quarters in 20 and 21. Mm-hmm. Let's assume that somebody qualifies for all 6 quarters. They're going to get 6 checks, and it's U.S. Treasury. I mean, that's right. How it works.
Right. Now, okay, I get that, but what is the rationale, I guess, is maybe the term for this credit? Okay. At this point, right?
Right.
And why did they change the rules to allow? Because it sounds like that may be one of the reasons why it's found money. People dismissed it at the time in 2020 didn't think they qualified, have never gone back and figured it out, right?
That's very true.
Yeah.
And to that point, a lot of people will have been told by a financial advisor or their CPA or their bookkeeper, whatever, you don't qualify. And I can mount an argument that said, well, whatever. But the real question to ask is, well, what if you do? Right. So the point is that with the changes in the legislation, which there were some additional acts that affected it, you don't have to show, for example, a loss of revenue during the period, the 6 quarters that were originally in the legislation. And originally you had to show an 50% reduction in 2020 over 2019. And then when we got to 21, they found out, well, we need to ease that up. So they went to 20%. Still, today, those qualifications are just one of about 8 or 10, and you only really have to hit 1 or 2 of them to qualify for a refund. So, it wasn't just revenue reduction, and as I mentioned earlier, the requirement or the inability to qualify if you took a PPP loan, that's gone too. Okay. Supply chain disruptions, the inability to hold meetings, lack of access to equipment, all kinds of qualifications have been added that make it so much easier, if you will. And I hope I'm answering your question.
No, you are answering my question, and I want to follow up on it. So what you're describing is, let's say, a business that immediately went to work from home. They didn't have access to the office. They didn't, have in-person meetings, but they conducted their business. Maybe they had no diminution in revenue. How do they prove that lack of access to equipment and some of those are subjective things, right?
They are.
Yeah, it's not like a very black and white thing like revenue reduction, right?
It's less black and white.
Yeah.
Because the way the tax code reads, or the way the legislation reads, it had to be at least a nominal effect, which was 10%, at least 10%. Whatever the process was that was affected, there had to be at least a nominal impact to that process. So, for example, if your business operated out of an office and all of your employees were in the office every day, and you had to switch to doing home-based business, there's a period of time there where you have a business disruption, okay? Depending on how long that took to get back up to speed, those quarters are qualifying quarters for you, if that makes sense.
Yeah, no, it makes sense, but you still have to have some documentation around how that shows that disruption in some form or fashion.
You do, and you can show.
And that's what you help with.
I do help with that. Now, the good news is that documentation is in place. The requirement to have that documentation is in the event that the IRS were to come back to you. It's not necessary that documentation be submitted with the application.
I got it. Okay.
The documentation that gets submitted is actually just payroll, 941s, quarterly 941s, and payroll summaries. Because what they're trying to determine is, first of all, on those 2 years, on average, how many full-time W-2s did you have? And then total W-2s, full-time and part-time, what did you pay out on a quarterly basis? So they want to know who was the person receiving the money, when did the check come, and how much did they get paid? And it's most businesses, almost every business I can think of, has ready access to that type of information, whether they do their own payroll, they use one of the payroll services, whatever. Usually you can get that within just a couple of days.
Right.
So that's the documentation that gets submitted with the application. And then the other documentation you can show, for example, that you had a state government notice. For example, Kemp signed 30 pieces of COVID-related legislation in 2020, and he signed another 25 in 2021. So within those 55 pieces, there is likely to be something that affected your business.
Right. in terms of maybe quarantine or
correct
or limited access or whatever.
Limited access, social distancing,
right.
Sanitation, even.
Right. Gotcha. Folks, we're chatting with Mark Campbell. Mark is a registered agent with Linqqs ERC Specialists. So, Mark, you mentioned that, hey, my CPA, my bookkeeper, thinks I don't qualify. Are you implying that, like, they're really not the ones that are on the front line of knowing this information? Or, I mean, what? Tell me more about that.
Happy to, because it really does vary. Some CPA firms that are higher volume firms actually will have specialists on the payroll that do specifically ERC work. Others, which are significantly smaller, it comes down to, do I have time to do this? And, oh, by the way, am I up to speed on what the changes were? Because those changes, I mean, it does take some time to crawl through it and understand it. And some folks just, once they read the first, version of ERC, they stopped. And that's not throwing shade on them. That's just how it worked. So and that's why I asked the question, well, what if you do qualify? In other words, I'm not trying to tell you your CPA is wrong, but let's spend an hour and make sure.
Right. Yeah. And I mean, to be fair to the CPA community, the bookkeeper community, there's a whole lot of stuff flying around out there.
Yes.
Even more so the last couple of years in terms of things to keep up with. So I get that. So you come in and take a look specifically at someone's circumstances of how they do business, and then all their payroll records for these quarters. And you decide which quarters they qualify.
I do. I can tell by the time we've spent just about an hour together, I can give them a pretty reliable estimate of which quarters they have qualified for, and a pretty reliable estimate of what their refund is going to be. Now, again, that counts as an estimate because we go through a 2-stage review before anything gets sent to the IRS. And the second stage is where it really gets scrutinized by a room full of CPAs that do nothing but ERC. They're not really interested in submitting anything to the IRS that's going to get rejected or not going to fly.
Right.
It's just not, just doesn't make sense. But during that cycle, we find out, and the client finds out exactly what their refund is going to be based on their qualification.
Right.
And it's really straightforward. I like the notion of giving somebody an estimate, but it's always a little bit scary for me because if for some reason something was miscalculated or whatever in the initial process, it's going to get caught. And it's conceivable that they could come back with a slightly lower refund, but in my experience, they get a slightly higher refund. So,
but in any case, folks don't spend the money till you know for sure what's going on, right?
That's true. I think, and the good news, I mean, the thing is, and partially because we do a thorough job in scrubbing these things.
Yeah.
But then we also have the time frame that the IRS requires or needs to get through the process. So people can be waiting up to 30 weeks. I mean, that's the reality of it.
That's 2/3 of a year almost.
Yes, it is.
Yeah.
And the largest portion of that is after the claim has been submitted to the IRS. Typically, our process from the day we have the first meeting till we know for sure what their exact refund is going to be is about 4 weeks.
Got it. Now, there are a lot of folks out there that are advertising this for these services, right?
There are.
And a lot of, I guess you might call them pop-ups. I mean, just like the Halloween costume stores or something, right?
Yeah.
They're taking advantage of this opportunity. So how do you distinguish yourselves from those kind of folks? And from, for that matter, from the established CPAs?
I think mostly it is being completely transparent from the get-go. For example, you will hear ads or receive robocalls or whatever telling you that you can qualify in 8 minutes and you're going to get $26,000 per employee. Well, I'm here to tell you, you can't qualify in 8 minutes. It doesn't happen. Secondly, our experience in our business is that the average refund is $17,000 per employee, and most of my clients are coming in either side of that line.
Okay.
Occasionally, there's somebody whose circumstance is very different, but most of the time, they're just a little either side of $17K per employee. And so, I'm sorry, I didn't mean to interrupt.
No, that's okay. So they're promising more than they can deliver?
They're promising enough to get you to pick up the phone or click on their website. And so that's the other thing, is that the way I go to market, this is the closest thing, talking with you today, is the closest thing that I've done to that comes even close to any sort of mass marketing approach, if you will. I do business by referral, and I do business by networking. I work face-to-face with clients. I would really rather not do this over the phone, because I think it establishes a relationship that's going to be important going forward. If there is a challenge with the claim, they know they can count on me to get it resolved for them or get them an explanation as to why it happened the way it did. So that, to me, is a huge difference than 8 minutes, $26,000 per employee. You know, they're just
right. Yeah. No, I get that. So they're leading with promises that either they don't keep, or they may stretch the filing a little bit. I mean, because that's where the danger zone is, right?
I think that's where the danger zone is, because if you don't spend the time, if you're not thorough in your qualification process, at the very least, you're teeing your client up for disappointment. And to me, that's important. I don't know if it's important to these other guys or not, but it is important to me.
Well, I mean, if there really are a pop-up shop, then by definition, it's not important, right?
Correct.
Because they're going to come and go.
Exactly right.
They're going to be gone by the time you get audited several years later, right?
Yeah, that's true.
Are there IRS warnings out about this?
Yes.
Say more about that.
The IRS
that says something right there, right? The fact that the IRS has taken the time to warn.
They have.
Yeah, so say more.
And so what the IRS warns against, their warning is kind of general about doing business with fly-by-night, for lack of a better term, companies, and just warning business owners that there are unscrupulous players in the marketplace, and don't get duped, because part of the filing is that you are, just like you are on your personal income taxes, you're acknowledging that everything you say is true. All right. I'm not sure that gets stressed as much with some businesses. Okay. And for me, you know, my position is, let's make sure you understand the question fully. And based on what your understanding is, let's answer the question, but don't fudge. Don't guess. Let's be straight up about it, because at the end of the day, you're gonna be more satisfied with the result, and it's not going to create a problem for you downstream. Right.
So you said the number is per employee. The average is about 17,000.
About 17,000. Yeah.
Okay. And how do you come up with that number? Is that just your experience over the clients that you've worked on to date, or how does that?
It's actually the number comes from Linqqs, which is the back office platform that I use, and that is roughly 50,000 claims all across the United States.
Got it.
And so the average there has been about 17K. And from an organizational standpoint, the average has been about 225K. So because when you take into account full-time versus part-time and things like that. But it's really interesting. And I think clients, I forget to use the word. Clients become more engaged as they start to understand how the process works and why certain questions are being asked the way they are. They tend to start feeling like this is really important now. You know, it's I call it found money, but I didn't call it easy money.
Ah, that's a distinct difference.
Yeah, definitely.
Yeah. So how much longer is this credit going to be available? Because we're now 3+ years past when the pandemic started. So is there a time limit or
there is?
More?
Yeah, there really is. The expiration date for ERC itself at the top level is April of 2025. Now, what will happen is that, as I mentioned earlier, we have 3 quarters in 2020 that are eligible and 3 in 2021. When we get to April of next year in 2024, the 2020 quarters will fall off the eligibility list. So the opportunity will be less, and the refunds will be less because there are only 3 quarters available to calculate from. But when we get to April of 2025, ERC is over.
It goes away.
It goes away.
So it's really important to get this done this year.
Absolutely.
Okay. To be able to make sure you are qualified for all periods of time.
Correct.
Yeah.
And you may not. Some businesses don't qualify for each quarter, all 6 quarters. Some might only qualify for 4, and their refund will be based on the quarters that they qualify for.
Right. Gotcha. Mark Campbell, folks, he's a registered agent with Linqqs ERC Specialists. So how much does let's get to the real tough question. How much does this cost?
Okay. From an industry standpoint, there's a fairly broad range. I charge a 15% commission after the client receives their refund.
Got it.
Once they get their refund, then they get billed for the fee.
Okay.
Some organizations require a deposit of up to like $2,500. I've heard of some even higher than that just to get the work started. It'll get netted, but the point is that they're asking for money up front, and I just don't do that.
Gotcha.
But 15% is our standard fee.
Okay. So, what are the big things that, besides just picking up the phone and getting in touch with you to learn more, and learn the details that apply to their specific business? What are kind of some of the particular issues that you think business owners are ignoring here that they really need to pay attention to, beyond just the fact that the program exists, which you've already covered? But what are the potholes in all this? I
think the potholes, frankly, are a little bit of fear and uncertainty. I think people tend to avoid doing things that somehow follow out to taxes or follow out to IRS. I think that is one of the things that maybe keeps business owners from moving this up the priority list. And so what I try to explain is that, assuming that your payroll taxes have been properly filed to date and that the information you provide is accurate, there is no reason to avoid doing this or to delay. It just doesn't make sense. Go ahead and do it. And like I said, occasionally you'll see somebody come in with a refund that's slightly lower than what they expected. It's still a cash infusion to their business because it is not taxable.
Okay, now there's the magic words, not taxable.
Yep.
Why is it not taxable?
It's because just like your IRS check is not from your refund is not taxable income. Neither is this, because again, it is a refund coming to you from the Treasury.
Got it. Okay. Terrific. Well, Mark, this has been very informative. I'm sure a lot of business owners are going to take this information, internalize it, and think, I need to get in touch with Mark. So let's give them directions on how they can do that.
Let me give them the simple approach.
Yeah,
because
sure.
My URL is way too long to try to give you over this.
Okay.
My telephone number, and this is a number direct to me, is 439-1608. And my email address is ercmarkacampbell@gmail.com. Once we make a connection through either of those, I can get you to the point where you can watch a short video that really provides some solid information about ERC in general. Mm-hmm. And also the site contains a frequently asked questions piece that I think clarifies a lot of things for customers, answers questions, and clears up any confusion. And then we go from there.
Terrific. Mark Campbell. Mark is a registered agent with Linqqs ERC Specialists. Mark, thank you so much for coming in and sharing your great work with us. We appreciate you.
Thanks for having me, John.
Absolutely. Hey, folks, just a quick thought for you. If you are drowning in your back office with administrative tasks that are overwhelming you, you've got your bookkeeping consists of a big box with a bunch of receipts in it. I got news for you. Mark's going to need more than that to help you out with the ERC, right, Mark?
That's correct.
So if you need to get those financials shaped up, here's an idea. Get in touch with SES Gabito over at Office Angels. She has a whole team of angels that work on not just administrative tasks or bookkeeping, but they do marketing, they do presentations, plan workshops, speaking engagements, and more. She's got quite a talented team, and I know this myself because I use their services, and they are fantastic. So give SE a call at 770-442-9246 and explain what your issues are, and she'll be able to help you. And or if you're shy, go to officeangels.us, but I just encourage you to call SE and let her know that we sent you, and I think you'll be glad you did. And folks, just a couple more things before we let you go for this edition of North Fulton Business Radio. I have a book coming out later this year. It's called, in 2023, it's called The Price and Value Journey, Raising Your Confidence, Your Value, and Your Prices Using the Generosity Mindset Method. If you're tired of the pricing that you're getting for your services, it'll be something you're interested in. And if you want more information, you want to get updated on the book itself, go to pricevaluejourney.com to learn more, sign up for updates, and to get a link to the podcast of the same name. And a thank you to you, our listeners. You have helped us celebrate our guest over the years. You've done that by sharing the show, by supporting the show on social media, and we just ask that you continue to do that, and we thank you for doing that, because we're here to celebrate the great work of business leaders in our community and give them a platform that otherwise they would not have, to be able to share their work and how they're helping folks out there. So please help us continue to be the voice of business in the North Fulton region and beyond, as you have in the past. We appreciate you. Thank you. So for my guest, Mark Campbell, I'm John Ray. Join us next time here on North Fulton Business Radio.